Hello everybody, welcome back. Let's have a look at some of these coins. We're just going to focus on Bitcoin on this one because Bitcoin is basically going to tell us what's going on generally with the rest of the market. However, overall the bigger picture is I'm not particularly bearish long term, as in like the next month or two. I expect by the end of March everything will be making a new all-time high. That's my expectation, but for the moment it's not looking like it wants to do that. It's actually looking pretty bearish on most time frames. Now we are in a weekend, and weekends are often bullish by nature, and we started off this weekend I suppose with a bit of a bounce on, we're looking at Bitcoin on the 4-hourly chart. We don't often go down to these low-term time frames, but when we're looking at a potential continuation of a change of direction, these lower-term time frames, they offer us some tidbits basically. So let's just first of all start on the daily, and as you can see on the daily, excuse me, we are still trending down, and we're below the centre of the Bollinger Band, which I have to say is still facing up. You know, we've got that 20 moving average is still facing up, so it's not made a curvature, it's not facing down, so it's not particularly bearish at this very moment in time. But the bulls have kind of lost their first hurdle. This is now in bear territory, which is the bottom side of the Bollinger Band, right? So if we're down here within this side, the bears have every opportunity to drag it down at least to the bottom here, which in my opinion is it's not unlikely at all. It's not unlikely. And if we look at some of these other time frames, then we'll see that that is also quite likely. So my initial expectations have played out, which was that we would revisit this week and then a little bit lower, shaking some people out, more people out. Obviously everybody expects Bitcoin to continue to go up to the moon forever, right? Which, you know, on the long-term time frames, it will do that. Okay, it will do that. But there's a lot of new people in this market right now. A lot of new people, very new people, and there's nothing wrong with being new. Everyone is new at one point, but this might be the first time that those people have seen something quite so horrendous. The whole dollar cost averaging has worked for most people until recently, and now I would imagine that there's a lot of panic setting in for those people who have been sold the dream of Bitcoin without really thinking too much about, you know, what that dream entails, which is you're buying into a highly volatile asset, an asset that can and has in the past retraced several times from an all-time high to about 85%. You know, so you know now I suppose people are starting to think, is that going to happen now? Has this bubble popped? Have I made the biggest mistake of my entire life? And I think that's an appropriate thing for you to think, but not at this stage in the cycle. But there's with money comes emotion. Whether you're loving it or feeling all down and depressed because you're down on your asset in something you don't quite understand, which is from where we are right now, 20% down from that top, potentially 24% down, and all the way down to what could be. Well, we'll just call it 30%. 30% retracement is no big deal. We had one of those just not that long ago, didn't we? At the top of this trend. Oh dear, 30%. You're lucky if that's all you got. If you bought at the top here and you got a 30% retracement, that would have been a scary moment. Look, a few weeks later, sailed away. In my opinion, this was a bit too fast, too aggressive, even though it's a genuine uptrend starting, on the back of chart signals and analysis. But it was still a little bit too aggressive, which is why I think it's pulling back to this extent now. Anyway, let's go down to the lower term time frames now that we've established that we are still in bear territory for the short term. Let's have a look at the 4-hourly. So the 4-hourly is clearly in a downtrend, being rejected from all these major moving averages. Since we broke down from the centre of the Bollinger Band here, we've been rejected from the 10 exponential, tried to reclaim that 10, got rejected at the 50, tried again here, rejected at the 50, now being rejected more or less at the 10, but held and supported up at the 200, right? So this is one of those situations where it could get particularly nasty if we broke down below here. So I showed this on the live stream last night. I don't often draw shapes and patterns and stuff, but this is just an idea of what's going on. So if we imagine that these moving averages are forming this kind of trajectory, so the 10 exponential is coming down roughly like this, which it won't be, but roughly speaking, and the 200 is going slightly up like this, what we found ourselves is a triangle formation And we could look at this in one way to give us a rough time frame as to decide which way it wants to go in the very short term. So if we just measure this right to the very end here, we're looking at a 3-day time frame where this formation will break one way or another. And it's not a formation, it's basically an expectation of moving averages. So if we break out of this one and close above this one, it's not the most bullish situation. We need to break above this one also, and we need to be supported above them, and we need to stay above them. The fact is, we've got a red cloud here. We've also got a negative cross here, but that was above the cloud, so it's not particularly bearish. All of these areas here are going to be resistance all the way up to 51.5, and we'll call it 52. Reclaiming areas of 52 would be more significant because we had 2 candle bodies here and a big breakdown from this zone as well, so, and a rejection point here as well. So we'll call it $52,000. Once that's reclaimed, the party is still on. But for the moment, it doesn't look like it wants to reclaim that. These bounces haven't been in any way convincing to me. So I think a breakdown is still more likely than a breakout. But that remains to be seen. A lot of this price action has a massive correlation with traditional markets at the moment, right? So you look at the Nasdaq's going down, you look at gold going down, and you look at Bitcoin's going down. Most of this, I would say, is dependent on this chart here, which is the DXY, the dollar index. So those assets all priced more or less in dollars, and the dollar increasing in strength, which means that the price of commodities and major indices that are all valued in dollar are probably going to feel a little bit of pain, because the dollar goes up, they go down. Generally speaking, that's the correlation that you've got there. It's not that Bitcoin and gold and Nasdaq are actually correlated, but it's because they're valued in dollars and the dollar is increasing in value. So that's the correlation. They share correlation with the DXY, the dollar index, and that's the problem here. Anyway, we are in the weekend, and so we often would expect to see some kind of bullish momentum, but we're not really getting it at the moment. It's still very early. It's like 10 o'clock. It's not that early. I mean, I've been up for hours. I like to look at this sometimes to give me an idea of what's going on with the retailers, right? So I kind of forget about this now. This is always massively long. I think it's broken, basically. But these two, they are more or less 50-50 at the moment. I keep refreshing this, and I always have a rule, which is if we're below 66, generally speaking, below 66, then the bears do have the opportunity to pull this down. Now, this was actually a lot lower last night. And the thing about retail investors is, especially ones on Binance, they do feel like they get a little bit, they're very, what's the right word for it? They're very quick to react to the way that the market works, alright? So you see this number here fluctuate way more than you would do with BitMEX. And the overall trend is in my opinion, for the retailers, they're trying to short this as best as possible. Me personally, even though I do expect the direction to be down, I'm a little concerned that that people are getting a bit too ahead of themselves with these shorts. Even though shorting, I suppose, is a perfectly appropriate situation to be doing it in this period of the market. I think I prefer to look at this as opportunities to go long and get a good entry point than actually starting to take shorts at this level now. If we do break down to here, look at it like this. This is how I choose to view it, right? The overall direction is still clearly up, and this signal here hasn't been cancelled out. This trend that began here with this cross here is still in play. So in that respect, I would expect this to perform a decent bounce and continue with this uptrend up to 60,000 and beyond over a period of weeks, maybe within a couple of months. That for me still appears to be the more enticing situation to be played out, even though we're having a significant downtrend, right? It's not even a downtrend; it's a massive pullback, all right? It's a sell-off. It's a sell-off, and it's been decided partially by Bitcoin, but also by the DXY. It's like insult to injury. So for me, taking shorts down at these levels, they can be little scalpy shorts. They're not shorts to hold on to. We've all seen what happens to people who short too much with GameStop and things like that, haven't we? We don't really want to get stuck in that. How far could you look to take this short down? If my expectations are met, it's another 13%. That's not too bad. That's a decent move. How far would you be looking to go if you were to long this from these dips, if that was your choice? Well, I mean, technically the sky's the limit, isn't it, really? The asset is still bullish. We are pulling back maybe by 30%. And then where will we go from there? 40, 50, 60, 70, 80, 100% maybe? I don't know. But the move to the up will be more than the move to the down. So I wouldn't really get too into your shorts at the moment. Little scalpy shorts, that's fine, but the biggest move is going to be to the up when all this is over. So what I would prefer to do is to wait it out and get an opportunity where it comes. So there's a few things that we can look at to find out where this bottom could take place. Oscillators being one of them. The RSI has previously poked its little head down at the bottom here. 1, 2, they were like a double bottom area, also on the green 50 exponential, which is looks like that's our perhaps one of our destinations where we could end up bouncing from. It's also the bottom of the Bollinger Band, also backed up with the 50 moving average, which is also, you could argue, on this wick here was tapped as well. This is that purple one there. So if we follow the same kind of direction with the same kind of supports of the same moving averages that we did on the last occasion, then this would likely be a decent opportunity to buy back or go long. That also might allow for this RSI to take a little plunge outside of its comfort zone into the oversold territory, and that could be okay. That could definitely be okay. So that's one thing. If we look at the weekly, all right, so the weekly, we've got a bearish engulfing candle, so this is normally a sign of a bit more further downside, maybe over a week or two, which is, again, isn't too much of a problem for me. Whereas the last time we had a significant pullback, it kind of moved towards the 10 exponential. That would bring us down price action wise from where we are at right now by another 14%, just coming up at about $40,000, so overshooting ever so slightly, I suppose, these zones here, just by probably a little wick. So there's a number of different significant supports which would still hold in the bullish formation overall on the weekly and on the daily, which would bring us down to perhaps $40,000 or maybe a little wick just below, just a little scam wick, and that would in many ways reset the start of the bullish formation. That would be the first opportunity to really go to town on longs and buybacks, if you're looking for a degree of risk to reward, I suppose, is the best way to look at it. Also, if we look at this money flow index, this is an upwards facing support that we've been looking at for quite a while now, for a very long time actually. Look, it's from back in 2019. So every time we have a stab up and a retest of these zones, this was overbought, definitely. I mean, this is very close to the previous two absolute top areas. So we were thinking back in, when these were happening, that that could be something to be concerned over. But the fact is, this weekly has got a lot better formation than these previous two parts of the cycle. This was a cycle high, this was mid-cycle massive FOMO basically, and this is nice staggered moves up, although this was a very high read and almost certainly needed to come back down. We have come back down now, and if we do, for whatever reason, start to plummet, and crash, I would expect that this money flow index would be held up upon this moving average, well, it's not moving average, on this trend line. That doesn't give us a price though. That just gives us another way to balance out our risk to reward for another entry point. If we did come down to 40,000 or just a little bit lower, I don't think that this would reach this trend line, to be honest. This, I mean, it might, but I'd be surprised if it did. It would probably need a much bigger, deeper pullback if it were to do that. If we were to go sideways and consolidate for a longer period of time, this price, this moving average, this money flow index, is going to catch up with this sooner or later. Once it does, I would expect a decent bounce from it. Now, obviously, this can't go up forever. This is going up all the way to 2022, but this would be where the cycle high is, in my opinion, and this is where the cycle high will be. So, when we do finally break down from this, this is where I would expect the one of the things that we look at for an overall top of the cycle. So once this has been broken down from we will get a money flow index read like this, and it will be pretty significant, very significant. This is a full-on retrace. This would be the super bear market that we would be looking at here. Massive pullback of money flow index. Basically what that refers to is volume leaving in droves, money leaving in droves, and an enormous collapse in price action. We're not in that situation at the moment. We're still making staggered approaches up, even with this massive overextended money flow index here. We haven't died, have we? We haven't crashed and died. We're still okay. Anyway, so I'm going to leave it with you there, but hopefully that has, I suppose, given you an idea roughly of what I'm expecting, which is essentially a little bit further downside perhaps, but still remaining in a bullish overall picture. And it's a simple shakeout, alright? It's just a simple shakeout. The Bitcoin dominance, I'll just bring this up just very briefly. So altcoins, you can see the odd occasional altcoin popping off here and there, but generally everything's trending with Bitcoin. But the occasional one is popping up. Now what we see actually is the Bitcoin dominance coming down on the day. There are obviously going to be altcoins gaining on Bitcoin. This isn't going to be super bullish for altcoins until we break down below this moving average. It's not a moving average, it's a trend line. It's very early for me. If we break down below this trend line, then alts will really pick up pace, but still we are basically meandering in this indecisive way. However, this is bearish. This chart is clearly bearish, and it's trying to hold up in this way, and it's not having a very convincing bounce, nor is it having a convincing breakdown. Eventually this will break down and alts will reign supreme once again. At the moment, while Bitcoin is still like this, I wouldn't expect a great deal from the majority of altcoins. However, the odd outlier is going to pop here and there, depending on who's tweeting what, or what development took place, or this, that, and the other. A lot of the time, altcoins are like trading stocks, and so you will get something that suddenly says, "Oh, look, I have done this, I can do this, and blah blah blah. I've partnered with so and so," and then the stock rallies. But organic movement for the vast majority of altcoins are going to trend with Bitcoin during this period of increased volatility and bearish sentiment. But in my opinion, the way I'm seeing Bitcoin looking to bounce around these zones, worst case scenario, around about this zone, this would be the bottom zone around 38, absolute bottom zone. What we should really be looking at is which of these altcoins are significantly oversold, and think about our strategy about getting back involved in some of them. Because if Bitcoin is retracing by 30%, 35%, some of these altcoins are going to retrace by 50, 60%. Doesn't mean that they're dead at all. It means that there's an opportunity there. I'm not saying that catching knives are the best way to do anything, but if there are certain assets out there that seem to be extremely oversold, it might be worth putting them on your radar and looking at those charts, especially when we come down to these levels. If they are significantly oversold and the grand picture of those tells you that actually this will pick up, then keep them on your radar. But overall, we have to stare at Bitcoin and work out what's going on with Bitcoin. Anyway, I imagine this video has gone on for way too long. I doubt many of you will have reached the end, but if you did, I hope you have a nice weekend, and take it easy.